I might be too much of an optimist, but having lived through sort of the first dot-com boom and bust, I don't think there are enough similarities for me to be worried. And additionally, we invest in very early stages, so I'm less worried about what's happening in those later rounds and what the options are for liquidity at that stage than I am about sort of creating companies that have some value that are going to be able to grow and probably raise further rounds of financing before they have to come to that decision point. I think what you're seeing with the sort of private markets is simply different options for companies and for founders in order to be a little bit more flexible in raising money so that they can do new things, invest, buy companies, sort of do all the things they used to be able to do when they only listed publicly, but not having to list their shares and being able to do that a bit more autonomously, which is probably good return for early shareholders, and I don't think a bad thing overall. I think the ecosystem is simply growing and supporting a lot of different ways for people to create and deliver value back.
I think there's very significant logic here. I mean, when you compare the industry 15, 20 years ago, I mean, I remember starting Canary Wolf 20 years ago when the largest ISP in the UK had 5,000 subscribers. The internet's now 10% of UK GDP. When the markets crashed in the late 90s, early 2000, I think there were probably about 300 million people on the internet. There are now 3 billion people on the internet. So I think, you know, the absolute market size is so much bigger than it ever was, that the prizes for winning are orders of magnitude larger than they ever were. I mean, Alibaba is a 15-year-old company. It's worth $250 billion. It's doing $6.5 billion in revenue. So I think, you know, the companies that are now part of tech are so significant and so large and are impacting the different areas of the economy that they're in such meaningful ways that, you know, if you're a winner in one of these sectors, the prize is so huge. I mean, when you think about media, for example, it used to be 200 years ago, The Guardian was a newspaper for Manchester. You know, 50 years ago, The Guardian was a newspaper for the UK. Now it's one of the largest global media properties. So again, sort of the scale of your audience is orders of magnitude larger. And I think the hardest thing for people to get their heads around is that, you know, it used to be that revenue was the be-all and the end-all of a media company or a retailer or a software company. Today, the first goal for these companies, and it's been true through Google, through Facebook, through Twitter, is audience. You have to build audience, and if you can build a large audience and an engaged audience, it's not good enough just to build an audience, but an engaged audience, then, I mean, historically, it's been pretty clear that you can build very substantial businesses, revenues, and profits to come after that. And I think we've seen that again and again and again.